Welcome back on Morning Movers. Lennar will give us a closer look at the homebuilder segment when the company reports earnings after the close. Where second quarter analysts are expecting earnings to come in at $1.94 on an adjusted basis on revenue of nearly $8.25 billion. And keep in mind, shares of Lennar down 20% this year, more than 40% below last September's high. Time now for Options Corner. Joining us to take a deeper look at Lennar is our very own Ducat data himself, Rick Ducat, lead market technician. Rick, it is good to see you. Haven't chatted with you in a little bit here. Talk to us about the trends you're paying attention to when it comes to the chart for Lennar.
Yes, good morning, Diane. Nice to be back. We can see Lennar really underperforming the broader market here during the past year. Also, really not exhibiting much correlation at all with the S&P 500. So one that is not really moving much in line or in opposition to broader forces here. And if we were to look at our candle chart for this name, we can see that for quite a while here, Lennar has been struggling after bottoming out here, 98.42 after a long slide. But now perhaps some green shoots are showing. We have an upward sloping channel here between our two white dashed lines. We can also see that RSI mostly cooperating, our momentum indicator following, for the most part, this green trend line sloping upward, and looked like perhaps we are slipping below that 50 midline here, but it's really common for momentum to slow down as we head into earnings, which is scheduled for today after the close, as we know. So an interesting setup here as we look toward this home builder name here. We've got some resistance to consider just above a series of lows and subsequent highs here near the 116 level.
And then, Rick, what are you noticing about open interest?
Sure. Open interest this month, the June monthly, this Friday's expiration, by far the highest open interest here. So that's an interesting situation here for this name as we look to earnings here. The call side, highest open interest by far, 150, then 175, but closer to current prices, more like 115, 110, 120. On the put side, 105 is the highest by far. Distant second and third, 100 and 107, 109 and 116, the 21-day EMA and the resistance. Those are two interesting levels that caught my eye.
All right. Thank you, Rick. It's great to have you back. Now to take us through an example trade, we've got Tom White, senior options contributor and co-host of Fast Market. So, Tom, what's the approach for an example trade, especially given that we've got earnings in front of us for Lennar?
Yeah, as you mentioned, this stock's down over 40% from those all-time highs that we saw last September. So the bar's really low in this name. You got 7% mortgage rates that are negatively affecting that. The more housing that's on the market up nearly 14% year over year. So there are some headwinds for this stock, but it has pulled back pretty significantly from those all-time highs. As we mentioned, implied volatility levels elevated going into this report. The option market pricing in about a plus or minus $7 move, $7.50 move. So that's about 7%. Either way in the shares going in here. So I looked at bullish call diagonal here where I can take advantage of volatility levels between option series. I went out to the July 3rd weekly option, so about 17 days to expiration. We're going to buy something that's at the money, the 109 strike call. Stocks are looking to open up just above 109. So we'll buy the 109 calls there with 17 days to expiration. And then in the near term, June 20th, monthly options that expire in just 4 days. We're going to sell that 116 strike call. And Rick mentioned that as an area of resistance. It sets up nicely with that one standard deviation that the option market's pricing in also. You're going to pay roughly about a $4.10 debit for this. That's going to be your risk, $410 per spread. Now, this is a $7 wide bullish call diagonal, and you're paying less than the width of it. So you've only got one break even. Anything above about 111, 112 is going to be profitability on this one, with the apex of profitability at or near that 116 strike that you sold. And you'll have the opportunity to extend duration. You'll be able to roll that short option as we get closer to expiration. But this is definitely a bullish view on this stock. But you're buying about a 50% implied volatility in the July 3rd weekly options on aggregate, selling about an 85%. So that dispersion lowers the entry point and risk on this trade.
All right, that's an example trade for Lennar. Those quarterly results due after the close today. Thank you, Tom.